What's up with the stock market and the economy? This is the Issues Watch podcast. Hi, I'm Jeff Kazerman, Vice President of Government Relations at the New Jersey Society of CPAs, and welcome to episode 64. I'm joined today by Paul Robertson, Senior Portfolio Manager with AllianceBernstein's Wealth Strategies Group, and he's a member of the firm's Client Investment Policy Group. Welcome, Paul.
Thanks, Jeff. It's a pleasure to be here.
Paul, I know you're presenting a webinar for our members this month where you'll be providing an update on the economy and the markets, but we couldn't wait and we wanted to hear a little bit about that before the webinar. For those who are interested in registering for the webinar, visit njcpa.org/plus. The live broadcast is at noon Eastern Time on February 18th, and we're offering replays on February 22nd and 24th. And it's free for NJCPA members. So, Paul, what are the top questions your clients are asking you regarding the economy and the markets?
Well, Jeff, let me start with some context. For our clients, their wealth is essentially irreplaceable. Our clients are not looking to make their fortunes. They've already done that. What they're looking to do is preserve their wealth in the face of their lifetime spending, taxes, and inflation. So that's what their questions are all about. Now, just as a quick aside, what they're not looking to do is to put a sizable chunk of their wealth into a stock tip they found on a Reddit chat forum. So the number one question on our clients' minds at the moment is, how can the stock market be doing so well when the economy is doing so poorly? People are seeing the US stock market today at close to record highs, but unlike previous times we've been at or close to record highs, this time we're doing it without economic conditions that are close to perfect. And just to put some context on this, there are still at least 10 million people in the US who are out of work as a result of the COVID outbreak. That is 10 million fewer people working now than there were pre-crisis. So our clients are looking at this and essentially scratching their heads.
And I was.
It is a great question. And the one clue that I will give your listeners is some of our more astute clients ask themselves, how important are low interest rates to the current level of the stock market? And what happens if or when interest rates rise again?
Very interesting. So let me ask you this. Do you think the vitality of the stock market will continue, or is it fated to level off or even decline? And when might that happen? I mean, it may be ironic, but everybody would have expected that to be happening now when coronavirus did. But instead, we're asking, well, everything is going so well in the stock market, when and will and if it will actually start to go down?
Yes, our clients are always scanning the horizon for any signs of the next big stock market crash. Now, I don't know when the next big stock market crash is. I've been at Bernstein now for a bit over 23 years, and I've seen three now. I saw the bursting of the tech bubble. I saw the global financial crisis in 2008, 2009, and now I've seen the coronavirus recession crash. I hope to be in this business for another 15 years, and inevitably, I think that means one, maybe two more big stock market crashes before I end my career. But when, I never know. Certainly when you see stocks delivering spectacular returns in a short space of time, you know the market is pulling forward returns that might otherwise have been achieved in the future. So in effect, the really strong returns of recent years are robbing the future of potential returns. So our forecasts for the future are for much more modest returns going forward with all the same volatility.
Interesting. So you're not expecting any kind of downturn, although one never knows what's going to happen, but you're not expecting any kind of sudden downturn or mild crash in the next year or two.
Well, I'm not expecting it, Jeff, but as you
Right.
point out, who could be surprised if it happened? Stocks in the short run are really volatile, and they swing one way or another on more emotion than on
Right.
fundamentals. So anything is possible, but I think if we take a medium-term framework, 5 to 10 years, I think stocks will deliver positive returns, and I think those returns will be better than investors would get from cash or bonds over the same time horizon.
So what kind of impact is this going to happen? What I'm referring to is, we've seen 2 rounds of $1 trillion stimulus payments, and President Biden is pushing for another round, and all this is creating just incredibly large debt. Is this going to have an impact on the future of the economy and the markets? I mean, one would think, and I'm not an economist, so maybe I'm the one who's thinking wrong, but shouldn't that have some sort of big negative impact at some point?
Very potentially, Jeff. A lot of our clients do ask, what is the price of all of this fiscal stimulus going to be over time? Is it going to be higher taxes as the federal government looks to restore its finances and bring down the level of debt? Will it be higher inflation because the Fed and or the government find it unpalatable to sort of withdraw a lot of monetary stimulus from the economy? Will it be lower potential future growth for the economy, or will it be some combination of all three? This is a question on many of our clients' minds today.
I know my financial planner way back when in the beginning of this, I asked that question. He said it's called more taxes, but I guess we'll have to wait and see. Let me ask you about the new administration. The Biden administration has just taken over, and their their economic policies are going to be far different from former President Trump. What do you think the impact the Biden administration will have on the markets?
Well, again, this is a very popular question amongst our clients. What impact will the Biden administration's policies have on the economy and the markets? But this is where I have to be a little bit critical of my adopted country these days. I would have thought that the posturing and posing of political parties leading into elections was pretty obvious. You promise the world in order to gather the biggest group of voters to your tent possible. But then in government, you tend to govern much more to the center than your policies. But that's not our client's perspective. Our client's perspective is that the Biden administration is hell-bent on implementing every one of the so-called Biden plans, be it
Right.
for taxes, immigration, trade, what have you. Without wanting to sort of be drawn into too much detail, I don't think they have the numbers to do that. And so for all the traditional reasons, plus not having the numbers, especially in the Senate, I think you're going to find them being a more centrist administration than many of our clients fear. And I would also make the point that although our media bubbles would suggest the opposite, politics in the US very rarely has a decisive impact on the economy. The US is a profoundly capitalist place, and the economy is driven by the business cycle rather more than government policy.
Very interesting. One of the things you just said, about how what they say during a campaign doesn't mean that's exactly what's going to happen. Whereas I think a lot of people who maybe are aren't too educated about politics or public policy or the economy tend to think, well, here's the Biden 100 point plan, and that then if he gets elected, those 100 points are going to, become law. But as I'm sure it's a lot harder than that. So that about wraps it up. I don't want to take all the steam out of your webinar coming up. But I want to thank you so much for joining us today, Paul. I know our members are excited to attend your upcoming webinar, and I am too.
Thank you. Thank you, Jeff. I'm looking forward to it.
Again, if you're interested in registering for the webinar Paul will be presenting for us this month, visit njcpa.org/plus and learn more about Alliance Bernstein at AllianceBernstein.com.